Good morning from Los Angeles, 10 a.m. Pacific, 1 p.m. Eastern. Welcome to Trading with Sergio, Tuesday edition. For the month of July, we're going to do live streams daily. Monday, Tuesday, Wednesday, Thursday. It's going to be Trading with Sergio. Friday's the usual power hour and a live stream for my special members of the channel on Wednesdays between 3 and 5 p.m. Pacific, depending on my schedule. Good morning, everyone. Hope all's doing well. Yesterday we had a little bit of a tariff, musical chairs again over the weekend. Bitcoin blew up. Talked about it yesterday during yesterday's live stream. Today we had CPI, just about as expected or a tad higher than expected. Maybe now President Trump and the administration will get off Jay Powell's ass, but I don't think it's going to happen. Today, Scott Bessent, the Treasury Secretary, said he should leave next May. I think that's done. So interest rates are still going higher. There is something I'm paying very close attention to. Actually, it's happening in Japan. It's not about sushi. The Japanese 30-year JGB rates are at 3.25%, skyrocketing basically. But tomorrow I'm going to talk in detail about that. I had done a video about the second coming of Japanese yen carry trade. There's good news and there's bad news, but you guys have to come back for that tomorrow. Today is going to be a quick one, probably a half hour, 45 minutes, the usual. My positions, I post my positions, full transparency every Monday, Wednesday, and Friday on the community page of the YouTube channel. That's for the subscribers. None of this is trading or financial advice. It's for information and education only. If you do decide to tag along, do your own due diligence. What I do is very risky. It's high risk, high reward. It's a trading account. It's not an investment account. I have to beat the benchmarks by probably 5-6x to make it worth my time. If you're not doing that, can reconsider what you're doing. Last but not least, as far as the market's concerned, we are grinding higher, although today it looks like we're kind of reversing after opening sharply higher. I'll go through a couple of charts. What I'm seeing, the ranges have become really, really anemic, right? Remember the old days? In April, we had 5, 6, 8% range during the day. Now we're stuck within a 1%, 1.5% range. That's because VIX is where it's at. VIX is about 17, although VIX is not going down. VIX should be at all-time highs, about 12 to 14 range. VIX volatility index, obviously. It's sticking around 16 to 18 range. So maybe this is the new normal, the higher elevated range for VIX. Please pay attention to all these indicators. You can't trade off of it, but please do pay attention to it. They do correlate. 10-year note, 20-year note going higher again today. Yeah, we have a problem, Houston, when it comes to interest rates. Interest rates cannot be talked down. It's a fact. The bond markets are way too large for anybody to talk it down, including the president. Yes, they do want lower interest rates, which I'm going to talk about. Why do we need lower interest rates, specifically on the consumer end? So we all have plastic crack in our pockets. We all know what we're talking about here, right? What is plastic crack? What is it? It's credit cards. Managed well, credit cards are wonderful. Credit cards managed well, paid balances on a timely manner, not carrying balances is a wonderful thing. You're literally floating the bank's money for 30 days. So, but how many of us do it? How many of us properly manage our credit cards? Multiple of them, right? If we open our wallets, we have, I don't know, 6, 8, 10 of them. From gas credit cards to obviously regular credit cards, cashback credit cards, all these bonuses. They're not doing it to do you a favor, folks. So take advantage of it. The banks do float your money. right? When you go deposit a check, they go, oh, the funds are not available for 5 days. I'm like, yeah, they're floating your money. So multiply that times millions of people doing the same thing. They're earning interest on your money until they give you your money, which is ridiculous, right? Well, do the same thing back. Do the same thing to the banks, right? You have 30 days. Go buy whatever you want to buy on credit cards, but make sure what you're buying, you have the money to pay for it at the end of the cycle. When the end of the cycle comes, not a dollars of balance should be forwarded unless you're looking to pay 25 to 35% interest rates. I mean, unfortunately, Americans these days are buying food on credit cards. What is happening here, right? So, again, I'm not against credit. I'm not against debt. I'm against manageable debt. I'm against common sense debt. And credit cards are wonderful, just amazing, right? So you go buy something today. You wait, you had 30 days. Maybe you get your paycheck, you pay for it. But once you start carrying balances, that becomes at some point an unmanageable thing. A lot of people switch credit cards. They go to zero APR credit cards. Great. If you can manage it, if you can get the offers, if you're getting the zero APR offers, by all means, charge it up. Roll it over to the new one. But, that game ends as well. My biggest concern is with when it comes to credit cards is not a lot, massive amounts of people carry balances forward. How many of you have you looked at your APR statement? Right? It's right on your either online or on your paper statement. It says it right then and there. What their banks are charging you to carry balances forward. What do you think? What do you think it is? What do you think the average is in the United States when it comes to credit card balances? It's pretty high, folks. It's about 25%. That's the average. If you have good credit, maybe you'll get the 20%. If you have bad credit, you get the 40, 50%. And God forbid, you miss a payment. What happens to that? Right? There's a default number that it jumps up to 50, 60%. Imagine that. I mean, when you go deposit your money at the bank, which you shouldn't, but we talked about that in the past, what you should do is at least be in a money market fund or get maybe 4%, 4.5%, right? Or in a T-bill. But a lot of people go just deposit in a savings account. Bank savings accounts are still paying, what, 1% these days? They've gone up from 0 to 1. How's that going to help you? So they pay you 1%, but then they charge you 35% when you carry balances on your credit card. So one last thing about credit cards. It has a direct correlation how the economy is doing, okay? Our economy is a service-based spender economy. It's been like that for the last 2-3 decades. We went away from manufacturing economy. Now we're a service-based spender economy. We buy shit. We love buying stuff. Maybe we're all depressed. That's our antidote. We go buy stuff. We feel good about stuff. Think about it. You're going to pay 35, 40% interest on it if you carry that balance forward, right? And since our economy's total GDP, okay, it's about $28 trillion. That's our total GDP, gross domestic product. What percentage of that is consumer spending, you guys think? 75%. Think about it. If the consumer doesn't spend, economy doesn't work in the United States. That's a fact. So if 75% of our GDP is consumer spending, obviously we're not doing it with our cash. Obviously we're doing it with plastic crack, right? If that slows down, if everybody starts defaulting, not everybody, even a small percentage of folks start defaulting because they can't make ends meet, they charge it up, they don't pay their bills, they're 30-day late, 60-day late, 90-day late, charge-offs, all that stuff, ruining your credit. Then what, right? So if you're going to have credit cards, a bunch of them, manage it. Just manage it properly. I'm not against it. But there's an alarming trend that's going on that I read, on the news the other day, and I want to talk about that just for a couple of minutes, is what is happening with credit card delinquencies, right? 30, 60, 90s, and what is happening with charge-offs. Charge-offs mean the bank has given up, they've chased your tail, and now they send you to a collection agency because they're not going to be able to collect. Well, this is what's happening, folks. You guys see this? So look at this chart. We'll look at it together in a minute after I, give you guys a little bit of an idea of what's going on. U.S. credit card delinquencies are surging. Well, with inflation and what's going on, right? Our W-2s are not enough. We can't pay our bills. Well, this is when the credit card crack game is going to get to you. The share of credit card balances at large banks 30 plus days past due reached 3.4% in Q1 2025, the third highest in at least 13 years. So if the economy is doing great, everybody's doing great according to the Fed, we have full employment, we have low inflation, why is this happening? It's happening because what the government's doing is gaslighting you. It's not true. The share of balances 60 plus and 90 plus days past due hit 2.47% and 1.77%, near record highs according to the Philly Fed. Concerningly, listen to this one now. Concerningly, the net charge-off rate rose to 5.99%, the highest since at least 2012. We're going back 13 years now, folks. We're going back to the end of the GFC, right? That's the 2008 crisis. The share of credit card losses relative to total outstanding credit card loans at large banks has tripled since Q3 2021. Meanwhile, the average credit card rate just hit 24.62%, about 25%. This is the average, the highest on record. Banks are swimming in cash, folks. It's your money. You got to do what you got to do. But please, 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 please do not carry balances forward. Americans are drowning in credit card debt. No question about it. And here's the chart. The green chart is 30-day. The the blue graph is 60-day. The one in the middle gray is 90-day. And look at the charge-offs. Look at the charge-offs. When did the charge-offs go down, collapse? It collapsed during the pandemic because the government printed money and sent you money while you're sitting on your butt at home. Well, look what's happening now. We spent all that money, all those savings, and now we're just soaring, right? Charge-offs. Remember, folks, credit is a wonderful thing. If you have it, if you have good credit, manage it properly, it's the oil of your machine, right? It's the gasoline. If you put too much gas, right, on, what's going to happen? You're going to kill the engine. You can't keep revving it, and that's what's happening. So credit card debt charge-offs are soaring. Meanwhile, everybody says the economy is great. Well, ask that to the average American if the economy is great. I don't think the economy is great. I mean, I'm fine. I'm not concerned about myself, but I see what's going on out there. I'm in touch with a lot of people who do gig work, as you guys may know from the other channel. They're struggling. It's not easy out there. And inflation is an additional tax, obviously, on our paychecks. What the government says is bullshit, is gaslighting. Oh, 2% inflation. There's not 2%. It's 6 or 7%. I talked about that yesterday. I'm going to put a video out at noon today. Dollar is losing its value, 11% this year so far. Well, that means you just lost 11% of your buying power, period. No ifs, no buts about it. So, do as you wish, but I'm not against credit cards. Please handle them carefully. It's plastic crack. You don't want to get addicted to crack. And that's what it is. And the banks want you to get addicted to it, right? They keep sending you the offers. They want to create a dependent society, but they don't talk to you about the downside of carrying balances. Well, there you are, 25% average interest rate on credit cards at an all-time high. Why is that? Yeah, poor banks. I feel bad for them, right? No. Anyway, so manage your credit cards carefully. Anyhow, so Vic, good morning. SJ, good morning. Luis, good morning. Zero. K-Zone, good morning. Mojo, what's up, Mojo? Hello, buying stuff. Is it dopamine? Yep, I 100% agree. I think a lot of people go spend money to feel good about things for themselves. And hello, buying stuff, dopamine. Yeah, it is. It's dopamine effect. You just feel good. Endorphins get released when you buy stuff for yourself. Well, you bought it late. I don't know. Put it in the chat. I bought a couple days ago, and I posted it. So for the members only, I have a members only group on Telegram. If you wanted to become a member, click join. Email me, sergio@sergioavedian.com. I will send you the link for the Telegram chat group. That's where I post my trades live. As soon as I do the trade, I post it live. Again, none of it is trading or financial advice. You need to tag along. You want to tag along? Tag along. You don't want to tag along? Fine, no problem. But it's a great little group, exchanging ideas. They're learning quite a bit. You know, I don't know. I think I'm doing okay with them anyway. So if you do want to support the channel and join the members group, and they will get tomorrow, for example, they will get a members only live at 4:30 p.m. Pacific, or maybe 4 p.m. Pacific, depending on my schedule. They get 4 of those a month as well, and you get the live trades. You get the complete positions at the end of the day as well, so they can keep track of what I'm doing. Again, what I'm doing is not for everyone. It's not an easy thing. There's a risk involved, obviously. Whoever says there is no risk involved, they're smoking that plastic crack. That's what they're doing. All right, so let's go to the charts and positions, and then let's see if I have time today. Yeah, I have time. So let me put the link up if any of you want to show up. This is the StreamYard link. It doesn't require any software. You just grab it. All I ask you is that you're in a quiet place with good internet reception. Okay, so we open higher today, selling off. I bought some puts right at the open. I think I nailed it low on that. Put some index puts. It's just balancing, really, just a balancing game, to be honest with you guys. You just want to, you're hoping that whatever you own on the long side is outperforming and whatever you're short is underperforming or going down. So here we are. Yeah, we're selling off a little bit. Where are we? Let's go to the monitor, to the positions. Okay, so not much has changed. I'll just highlight it. I will post these tomorrow for the regular subscribers, but obviously I'll post it for my members at the end of the day. Take a picture of it. I'm long 50 AAPU, which is the 2x ETF of Apple, August 15 expiration. 50 of those at 80 cents. They're about 75, 80 cents. So looking for a breakout there. I'm short 10 fuel cell August 6 puts at a buck. They're about $1.25. But I'm also long October 5 calls, 70 of those at about $1.16. They're about 95 cents. I was long SMCI 20 August 60 calls, sold them today at 250 and be done with that position. Stock is up like 4, I think, today. Yeah, it's about 7.5%. I am short now 2,100 shares of SoFi. I think it's going to be the first red day. So that's why, I got to go short. I got to go long. I can't just be a long. I have a balanced portfolio most of the time. And so today is red day, the first red day, I think, in the last 7-8 days on SoFi. Looking for a pullback in SoFi. Trimmed this position yesterday. Still have it. I'm short 20. Soundhound, September 13 puts. At 225, they're about 275. I'm not going to add. I actually trimmed yesterday correctly. And I am long 35, September 25, 15 calls, 35, 15 calls, September 19th expiration. I'm going to keep those, but if you guys look at it, look at the position when I posted yesterday and compare it to the Friday from the community page, you guys will see the differences. That's what I would highly recommend. If you're going to tag along, don't just tag along blindly. Just go back. I'm posting every Monday, Wednesday, Friday. Just go back and look at the community page. You'll see the differences. You'll see the moves, what's happening. So this morning, I was long going into today, 5 SPY, 620 puts. I was long 15, trimmed it to 5. Closing yesterday was 5. This morning, I bought 5 more at 672. Sold those at 821. Keeping the 5. And this is the 672 price, actually. You guys can see. I'm going to keep it or add to this position. I added to TSSI this morning. So I'm in a synthetic. So I'm short 15 of the TSSI August 20 puts. I'm short 261. They're at 255. I am long though, so I took that money and with that credit, I bought myself a call debit spread, 22.5, 30 call debit spreads. 15 of those is balanced, but I'm going to make this unbalanced probably shortly. I want to add to this position. I don't mind getting put. So I'm not even looking at the call debit spread side, the money I spent on that. I'm just looking at the put side. I'm selling the August 20 puts on average of 260. Do I want to own TSSI at 17.5, 1740? Absolutely. Yes, I do. And so if I get a sign, I will increase this position. And I trimmed this position as well. I was at 3,500 shares. Now I'm down to 2,000 shares of WeRide. Average cost 777. Stock is 859, 860. So decent profits there. If we do rally this morning, I missed selling it. I was going to sell another 500 shares, but missed it. It's okay. I'll keep it. So yeah, I keep trimming. Like if you look at last Wednesday, I had 14 or 15 positions, then trimmed it to 13, then trimmed it again. Yesterday we're down to 8, or actually now down to 7. 1, 2, 3, 4, 5, 6, 7, right? So basically I look at it as I plant a field of corn, I trim, I take profits, and I take losses if I need to. And then you guys must know by now, all I watch is account equity, okay? What kind of drawdowns I'm experiencing, because all these positions are moving individually, obviously, right? They're all moving up and down. Well, you're hoping that the longs are going up and shorts are going down. Well, some days it works that way. Some days it doesn't work that way. Like today, it's working that way. The longs are behaving. Shorts are okay. I only have one short. I had multiple shorts, and I covered those with profits. I'm just trading the equity game. That's what the game I'm playing. And my members know it. If you've been watching me for a while, you know it. Let's go to the charts. This is the spiders. So it looks like we're putting a key reversal day in today. There is a bearish divergence. I'm really watching like a hawk, actually, that could be developing on MACD. This is the QQQ. QQQ made an all-time high because of NVIDIA today, but still bearish divergence is working there as well. Be careful, folks. I do not like the market here as much as anybody else does. Key reversal days are important days to watch. Be careful. I am long Apple or AAPU. I think it's just consolidating before it goes higher, building a little bit of a bull flag here. That's why I'm in AAPU, which is the 2x ETF of Apple. I do like this position. Fuel cell, I talked about. That's what that looks like. I like stocks that go sideways. That's why I'm short the August puts and long the October's, giving myself some time. SoFi added 100 more shares to the short side today at 2040 something, I think. So those are all the labels you guys can see. 2111, I see a pullback to about 18.5, and I actually want to go short Joby Aviation today. Yeah, trees don't grow to the sky, folks. You got to go short, you got to go long. Let's go with the positions first. SMCI, I was long. I cleaned those up. Nice strong day today. Quite a decent move. I may just roll them down by some maybe 55s or maybe go to 65s. I don't know. We'll see on that one. We ride. Well, a couple thousand shares are still going sideways. I'm not minding the labels anymore. I've been trading We Ride for months now. Bitcoin hit 123. A little bit of a correction to about 117 today. Nothing to see here, folks. It's going higher. On this leg, I think it's going to 140. I talked about that couple actually last Friday. And TSSI is one of my other ones. I'm short the puts, long the calls. I have a synthetic call debit spread actually, so I have a synthetic there. I like the stock quite a bit here on the 50 EMA. And Soundhound, that's the last long. Only down, let's see, down a penny, not much. Again, synthetic, instead of buying the stock, short puts, long calls. If I'm going to trade, I'm going to trade that way. I don't, short puts are part of it. Just I collect the premium and then spend some of it on the call side, but always making sure that I have premium left over in case it goes sideways, right? So, and the first thing I'm doing is, do I want to get assigned? Yes. I will take the stock at that level. Like TSSI, I want to own at 17.5. Okay, well, I'm short the puts. If it's below 20, I'm going to get assigned. If it takes off and does a correction of the correction. I was short the stock, by the way. That's why you have the labels there. I was short at 30.5. Covered it early, actually. Covered it about 26. This one I'm watching, I was short Sezzle at 177. It's coming down to the 50 EMA in the middle Bollinger Band, which I like on the first pullback. I covered this one early too. I made about 20 points on it, but it just left 20 points on the table. Next thing I want to do is actually Lululemon. I'm really watching like a hawk. Yeah, we're about to retest the low, make a lower low. There is a bullish divergence pattern developing here. I want to be all over Lululemon. I talked about it yesterday. I like the Chinese market quite a bit. Oh my God, yeah, Baba up 8.5 now. Yeah, they broke that wedge to the downside, shook people out. I want to be in Baba. I want to be in Billy. That's Billy. Beautiful charts. I want to be in Baidu. And yeah, that's, people say, oh, Chinese economy is falling apart. No, it's not. And they're pumping. They're stimulating like mad. And that's what a lot of people don't understand. They go, oh, it's nothing about bad news. I'm like, yeah, bad news is good news, actually, because stocks do bottom or top 6 to 8 months ahead of news. So don't be fooled with that, folks. But one concerning thing that I'm looking at is the JGB rates, 30-year bonds versus ours. This is the 20-year note. So this is an inverse indicator. If it's going down, that means interest rates are going up. Well, we're about to retest 84. And yeah, if our 10-year goes above 5, watch out, folks. And then the JGB rates going to 325 is ridiculously high. I mean, they were 0 for 25 years. It seems like they have lost control, but I'm going to do a really big segment on that tomorrow, so come back and understand it. Actually, I did a really popular video about a couple, 3 weeks ago, right? Japanese yen carry trade crisis number 2. If the JGB rates keep going higher, watch out, folks. And what else? Yeah, what else am I watching? Let's see. Couple of stocks. No, that's about it. Yeah, that's where we are. Pretty quiet day. Adjusting certain things, making sure we don't get too much of a drawdown, making sure your drawdowns are shallow and you get the all-time highs when the market kicks in. And that's all we're trying to do, folks. That's all we're trying to do. All-time high after all-time high. That's all we're trying to do. I am looking at gold. Let me look at that real quick. I'm looking at gold down day today. I'm not going to trade gold itself. It's like in a wedge. But I want to trade NUGT, which is the 2x ETF of the gold miners. Actually, we bounced right off the trend line today. Yeah, I do like that quite a bit. Gold, Bitcoin, all these things are going to go higher and higher and higher and higher. The fact is, kick the can down the road, print, 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 spend, spend, spend. That's where we are. Nothing is going to change, man. I think we're way past the point of no return. Cutting debt, cutting deficits, not going to work. We just can't. We can't stop it. We're addicted. We're addicted to debt. Consumers are addicted to debt with credit cards, and our big boys in Washington are addicted to debt. They haven't seen a dollar they don't like. They don't not only like your dollars, but they also like spending more than they take in. So, yeah, good job, Zero Kane. Watchlist last week, NVTS, Reddit, Rocket Labs, PLL. Yeah, actually, I didn't look at that. Lemonade. Lemonade had a nice move at the close yesterday, moving back up. Manny P, good morning. Good question. Sergio, to obtain dividends from a stock, can you just buy? Yeah, with any broker. Make sure it's right. There's a thing called ex-dividend date. That's where the stock price gets reduced by the amount of the dividend. A lot of people think their stock went down. It didn't go down. So once it goes ex-dividend date, about a week to 2 weeks later, you get paid. You get the cash in your account. A lot of people choose like to do that. When you do it with high dividend stocks, you should think of reinvesting. A lot of brokers, not a lot, every broker has a reinvestment plan. So as soon as you get the dividend, they go buy more shares for you, fractional shares. That works. That's the power of compounding, right? That works. That works wonders. What are the preferred shares? I don't pay attention to too many dividend stocks. I'm trying to do 4 or 5x. But I know Schwab high dividend ETF is pretty decent. There are a bunch of them. A lot. A lot of the consumer cyclicals, a lot of the consumer stocks have decent dividends. When I say decent, if you get to 4 or 5%, that's decent. You're not going to get more than that. If you're getting more than that, there's something wrong. If you get a super high dividend, you got to question that as well. A lot of people are doing it with MSTY, which is the dividend yielding ETF of MSTR of strategy. So be careful with that one. Yeah. I think Schwab is SCHD, if I'm not mistaken. But, do your own research. I don't pay attention to too many dividends. Could you explain in simple terms what you're looking for? I can do that tomorrow with the members group. Yeah, we're looking for a breakout. We're looking for a breakout on NUGT. Well, gold. NUGT follows gold. So if gold breaks out, NUGT is going to break out. And we'll see. We'll see what kind of trade structure I put on. I put on a couple things on the members group. It was just floating ideas. I think, put credit spread, call credit spread, and then we'll take both amount of the money buy in the middle of the body call. But we'll talk about that tomorrow in the members group. What's your thought on ETF like QQQ? Yeah, if you dollar cost average, it's going to do wonders for you. You can't time it. So my mentors used to say something to me, which is reasonably valid still, although it's not as much as before because of the volatility. They used to tell me time spent in the market. Okay, listen to this carefully now. Time spent in the market beats time spent timing the market. A lot of people try to time stuff. It's just if you're youngish, let's say 30 under, just DCA, dollar cost average, triple Q, SPY. Yeah, we had a 20% drawdown. You will get those drawdowns. In fact, I'll prove my point to you guys. So here's that. You guys can see that, I'm sure. Okay, so SPY, which is the S&P 500, which is the benchmark, right? Okay, so this is 1 year, 1 day. This is 1 year, 3 days. See, you have all these pullbacks, but then ultimately, where do we go? This is all because we're printing money, folks. Most of this is because of that. It's not because of anything else. Don't fool yourself. So you have to protect yourself against debasing of the currency, against devaluing of the currency. So how do you protect yourself? You invest. You have to. You have to keep pace. This is the only way, right? You have a massive pullback here, but then new high, massive pullback, new high, sharp pullback, Japanese yen carry trade, new high, massive crash, new high. And I go back more. I go back 10 years. See, this is the SPY. Trend is your friend. Yes, you had COVID, right? It goes from, but you can't time this. You just got to DCA. If you DCA'd into SPY or triple Q, and this is triple Q going back 10 years, you have pullbacks. So look where we are, right? And that's what people don't understand, power of compounding. So if you do SPY or triple Q, DCA, dollar cost average, every month, every week, whatever you're going to do the exact same amount, right? Not shares, amount, $100, $200, $500, whatever you can afford, and create yourself a nest egg outside your 401k, outside your IRA, outside your work, outside your, all that stuff. Just whatever you can throw, right? Look, if you paid your credit card bills on time and not paid the interest to the banks, take that money and put it in here. Don't go to Starbucks every day for an $8 latte. Forget about that. Take that $40 a week and put it into here. Look where you will be. I'm a huge fan of dollar cost averaging because it goes as far as anything will give you, and 10% a year include. And if you do reinvest your dividends, 10, 11% a year on average, going back 100 years, nothing has done better. And people don't understand it. People don't understand the power of compounding, Okay, cool. We don't even want to think about that. I eradicated the word cover call from my vocabulary right here. No cover call. Cover call is garbage. And my members are learning that too, because I hear horror stories with cover calls. Do not do cover calls. Then you're trading. You're not dollar cost averaging. Wherever you're getting that idea, and I know where it's coming from probably, but cover calls don't do shit. Cover calls don't protect you. How much did cover calls protect you when the market tanked 25%? None. And what did they do? They put you in a chokehold, and you don't participate on the upside. Cover calls are garbage. Absolutely garbage. Do you use the seasonal chart? What does that mean? Cycles. I pay attention to some cycle work, but not much. I'm okay with charts. I don't mind, but you can create so many biases with charts. Charts tell you the past. It doesn't tell you the future. So to me, yeah, it's a good reference point to look at it, but charts are not the only thing you can trade off of. And when the volatility picks up, charts are meaningless completely. Like when we were going up and down 6-8% a day, what charts? People look at charts, they day trade, they draw lines, and I'm like, what are you guys doing? The average for each month, yeah, there's seasonality, obviously, right? Summer months are better than the first couple of months of the year because of the flows, right? All the corporate buybacks come in, all the 401k money and pension plan money comes in, market's strong the first month or two of the year. Then it stops, it slows down. May it's kind of iffy. October is kind of iffy. I do look at it, but look, man, nobody knows any of this stuff, right? I mean, you can't tell me what the market's going to do the next 10 minutes. Nobody knows. You just go with the flow. You just got to figure that out. Look, charts are useful to a point, right? But I mean, I'm paying attention to a lot more like things like, because I trade derivatives and options. I trade a lot. I pay a lot more attention to, data, right? What the big boys are doing. The big whales are coming in the market. When somebody comes in, buys $1 billion worth of zero DTE calls, you think they want it to expire worthless? No. So you pay attention to that. You pay attention to gamma. You pay attention to the delta, DEX, GEX, all these things. If you're a short-term trader, I'm a swing trader, so I'm paying more attention to data these days more than charts. Poor man cover call. It's all right. Look, man, I don't like cover calls. Period. If I'm on trade, I'm on trade. Cover calls like kissing your sister. You go to a dance and you couldn't find a girl and you just kiss your sister. Honestly, I mean, look, a lot of people talk about it, wheeling, get put and sell the call, and just why? Just leave the stock alone, let it run. How many times could you have sold cover calls on Palantir or SoFi or things like that, or Hood? All you're going to do is just stop yourself from making generational wealth. You're just going to roll and keep going further out and roll, and then the stock will tank and that cover call will not give you any protection. It just doesn't make any sense. Just, I joke about it with my members group. I tell them, be a man, hold the fucking stock. What's the cover call for? Oh, you're going to make an extra 1.5%? Okay, and then stock takes off, goes up 20%. You're deep in the money now. Now you're scrambling. You just left 19% on the table. Bro, if you like the stock that much, why are you stopping yourself? So as I said before, cover calls, all they do is stop you from realizing your full potential. Basically, you're in prison now. You can buy it back and sell the stock, of course. You can do that, but most people don't do that. They just let it go deep in the money. First of all, they had conviction to sell a put and get assigned, right? They like the stock. And then they go limit the upside by selling a cover call, especially in a bull market. In a bear market, cover calls don't work at all, because things go down a lot faster than they go up. That 2% you took in, stock goes down 15% in a week. What is that going to do for you? Now you're going to hope and pray that the market comes back and saves your asset. Not every time that's going to happen. Trust me, folks, cover calls are okay. Not for me. I mean, every time I do it, I still do it once in a very long time. Like if I get nailed with something, which is rare, but it happens, to repair the position, maybe I'll sell cover calls. But if a stock is on an uptrend, why would I sell a cover call? Why would I do that? I mean, there's an established uptrend, right? A million different stocks. One of my members had a cover call, MP. You guys saw what happened to that one? You leave 30 points on the table. Why? If you're convinced that the stock is a good stock, good company, you are ballsy enough to sell a put, right? And you get assigned, keep the shares. Who gives a shit about cover calls? Cover calls are, it is kissing your sister. Yeah, I'm okay with call spreads. I'm not against it. Like when I do synthetics, some of my synthetics, I sell the put and then to put a call debit spread on. If I do it with limits, obviously, I still want to do, when I do a call debit spread, I want to make sure I'm getting like 5, 6 to 1. Otherwise, I won't do it. But most of the time, when I'm doing a synthetic, I'll just sell a put. And then with that money, make sure not all of that money, maybe a third of that money, I'll go buy out of the money called debit spread. That kind of turbocharges the upside. And if it doesn't happen, I at least have, because I look at how efficient the trade is, right? So how much is it costing me in buying power to sell the puts? And then what percentage of that credit premium I want to spend on the calls in case the stock goes up, then I'm just turbocharging my return. Instead of getting just the put premium, which is 2-3%, let's say a month, now you're looking at 10, 15, 20%. That's how you create return. Selling the puts and waiting is like forever. It is. It's like you go to the dance and you can get hooked up with a girl, you're kissing your sister now. I'm like, why am I doing that for? I'd rather not go to the dance. Bullshit. What income? And then they leave 50% on the table and watch the stock go up. Bro, there's no income. Okay? How many examples can I give you guys? I mean, I'm sure you guys know. Right? How many times could you have sold cover calls on NVIDIA and be happy with it? Just let the thing run, man. It's a great thoroughbred horse, right? What do you do to the thoroughbred? You're the jockey of the thoroughbred. You're sitting on it. You're holding the, the reins. You're holding the horse back. Let the fucking thing run. It wants to run. It's the best horse on the planet. Just let it run. That's how you double your account, folks. You're going to have 2 winners a year, okay? A lot of people talk about this win rate. Who gives a shit about the win rate? That's the last thing I look at. You know what my win rate is this year, guys? 53%. 53% winners, 47% losers. How much is my account up? 64% as of today. We're half year, so I'll be at 100% at the end of the year. Who cares about win rate? It's like people just get stuck with shit in their head that just go, oh, win rate. Oh, win 9 out of 10 times. Yeah, and what about it? Let the winners run. Take small losses. Let the winners run. Let it run. It's a good horse. Let it run. Why CDS over calls? No, CDS over calls, less premium you're putting out, right? I mean, if you have real true balls, you just go buy the calls. But buying calls is going to get you to the poorhouse, because buying premium, putting out premium constantly, because when you buy calls, right, you have the double D's working against you, and you have to be right in those double D's, direction and duration. There's something called in calls called theta. It's one of the Greeks. It's called time decay. Fighting against it. Basically, you're paying rent every day to the seller. You start have to thinking about these things. That's why you do a CDS. You want to capture most of that spread. But when you're selling the call against your long call, right, at least you're benefiting from some decay on the upper end, on the upper band. So, yeah. If you guys are still confused on why to not sell cover call, that's a fact right there. Horror stories. Horror. Oh, I left 800,000 on the table. I'm like, yeah, go sell cover call. Go get your 2%. Yo, macro, what's up? Anyway, folks. All right. Not trading financial advice, but I'll take a look at it. What an AGNC. What the heck is that? I don't know. Let's take a look. Please don't be a penny stock. Oh, it's a REIT. Okay. Oh, Lord. This is the 10-year AGNC. No, not for me. I don't like this. I don't like things when they go from the upper left-hand corner of the screen to the lower right-hand corner of the screen. If this was the other way around, I would love it. No. Well, you can do whatever you want with it. Not for me. Maybe it has a big dividend or something. I don't know. Yeah. It's a REIT. What is it? Agency Investment Corp REIT. What kind of REIT is it? Is it residential? Is it commercial? Yeah, no thanks. I mean, it could be fine. I don't know anything about it, but just looking at it, it's a REIT. It gets affected by market drawdowns, obviously. The thing went from 10.5 to 8, 25%, just like the market did, so it didn't give you any protection. Market's at an all-time high. This thing is nowhere near at an all-time high. I mean, I don't know, underperformer. Look at 10-year. It's just gone nothing but go down. Look at this thing. Every crash, it gets affected immensely, and it's been going down forever. I don't know if the dividends are going to save you on this one, and this is forever. I mean, No. Well, not my thing. I mean, it could be your thing. I don't know. I don't know anything about it, but I'm just looking at it superficially. That's it. Okay, hopping off. You have, yeah, good luck on that. I mean, when the dividend is that high, right? You know, you have to think of yourself. You have to think of, if it's too good to be true, it's probably true. When you're getting 17, 20% on something, they're about to get a dividend cut. When they cut that dividend, that stock is going to get halved. Right. Again, I don't know anything about it. I've seen it a million times with super high dividend rates like that. The reason for that is because stock is going down. They kept the dividend the same, that the price of the stock or the REIT is going down. So the dividend keeps going higher and higher. At some point, they cannot support that dividend. Either they will have to do something about it, which is cut the dividend most of the time. 17% a month? No. You're not getting 17% a month. Recheck that, please. 17% a year, maybe? Monthly? You get the dividends monthly, probably, but you're not getting 17% a month. If you were getting 17% a month, you would own that stock at a negative by now. I would buy it. So, okay, 6 times 17 is 102. So in 6 months, you don't care where the stock is at. You're getting 17%. You own at zero cost basis. Okay, great. Yeah, 12 cents. Okay, so what is that? Okay, good thing you mentioned that. 12 times 12 is 144. My math is pretty sharp, buddy. So $1.44, right? Stock price is $9. $1.44 divided by 8.5 is 17%. That's annual. Okay, great. Yeah, not look, different folks, different strokes. It ain't for me, but it could be for you. Yeah, I mean, hey. Yeah. All right, I'm gonna hop off. Nobody wants to come on. Nobody wants to join the chat. I mean, not chat's fine. Nobody wants to join the live. Come show your faces, man. I'm not gonna bite. Don't get intimidated. I'm a nice guy. Ask my members. Am I a nice guy, members? Yes. Somebody put a thumbs up. Don't make me look bad. A couple of days ago, I gave him a little shit. They felt like they're on the trading desk. I just like that. I mean, tough love, right? Old style. Anyway. All right, folks. I'll be back tomorrow. Trading with Sergio. Wednesday edition. Yeah. Yeah. Hey. Hello. Yeah. I'm trying to eradicate. It's like the plague. I'm trying to eradicate cover calls from my members' vocabulary. Like eliminate. Like the plague. Get rid of it. Yes, please do. Good idea. Hit the like. Yeah, please hit the like. Algo likes it supposedly. On your exit, it's free. Just touch it. Okay, go to work. Be safe out there, sir. Yes, please hit the like. Share, subscribe, turn on notifications. All these things my YouTube manager says to say. Yeah, I mean, I enjoy doing these, just educate and inform and get some financial freedom out of it, guys, gals. Forget the government. Government's not going to save your ass. Manage your money properly. DCA Bitcoin, seriously. People go like, oh, it's such a scam. I'm like, you guys have no idea what you guys are talking about. And, but anyway, not my problem. Hit the like. Yes. Thank you. See you guys tomorrow, 10 a.m. Pacific, 1 p.m. Eastern. Please share. Please like. Please say, hey, this guy I think knows what he's talking about. And the positions are posted yesterday. So I'll post them again tomorrow and Friday. But if you want to become a member, click join. You get me for a Big Mac. I don't know. I think it's pretty fair. I'm not doing it for the money. If I was doing it for the money, I would charge $999 a month. It's worth it probably. But Yeah, and then email me, Sergio@sergioavedian.com. I'll send you the Telegram chat group link. Then you'll have my live transactions. Ooh, Serge did this, Serge did that. I'm like, I don't care what I do. Honestly, it's on autopilot. It gets there, I do it. If it doesn't get there, I do it. I don't chase it. I don't sell cover calls. Allocate properly, risk manage properly, and then the numbers just work out themselves. All right, folks, I'll see you guys tomorrow at 10 a.m. Pacific, 1 p.m. Eastern. Much love. Stay healthy. Enjoy your day.